Okay, morning. Welcome to another session of the market roundup, nightly roundup. Today is the 17th of September, 2025. Okay, so what happened today? I think for the first time in 2025, the Fed cut the interest rate by 25 basis points. And I think the key reason was they blamed the weaker labor market for this. So immediately after that, you could tell, well, you couldn't really tell, but I'm going to show a few things. A few things happened. The dollar actually fell to a lowest level in, I think, since February 2022. A few other things to note is that this is actually the first PCE inflation. So it marks the first interest rate cut since the core PCE inflation at 2.9% in 30 plus years. And this decision was driven by the labor market portion of the Fed's dual mandates. I think the Feds look at a few key things, but number one is the weaker labor markets, and they look at inflation as well, but inflation is not one of the key reasons why this rate is being caused. They're looking at the weaker labor markets, which is actually being told by the PC readings from, I think it was a week or two ago. It's also important also that I think there was actually a clear outlier, and this was is a Steve Myron, one of this is like key Trump's appointee, and he dissented the decision. He preferred a 50 base point support instead of the 0.25 which was given today. So but unfortunately we had what we had today. But again, what are the key things we are looking at? I think the market knows that the Fed will be prioritizing the labor market over inflation, and as a result, the labor now sees a base rate, a base a base case for four more cuts by September 2026, even though it's looking like there might be two more before the end of the year this year. I think the one key point to note here is that I've never seen the Fed cut once in any one year at all. It's either been minimum two or more. So the Fed is now officially cutting rates with an S&P at a record high. And the last 20 times this happened, the S&P rose as an average of, I think, 14% over the next 12 months. And I think this by Scott Carson. And the near-term volatility will persist with about 50% of cases resulting in negative 1-month returns. Also, what about the labor markets? I don't live in America, I live in the UK, but they're fairly similar markets actually. But heading into the rate cut, home buyer demand is at a second lowest level on record, which is about near 2009 lows. So, but what's interesting is that the rates have already dropped in anticipation today. So it's kind of priced in. The Fed wants a relief in the housing market, and literally that's what it is. But I'm here to mostly focus a bit on equities and commodities, I think, which is the we look as trader, investor. Yes, of course, the real estate is part of it. But one thing Powell stated is that no one really knows where the economy will be in 3 years. When he was asked what's coming next, he said he doesn't know. Okay, which is just a good, perfect summary here. So if there's enough interest, we just have to be on the lookout for the market. So let's have a look at and see what we saw today, and I shall share my screen. Let's see what we saw. Okay, so if we look at the SPY, which has actually been running into the rate cuts, this was a few years ago. Okay, which has been running into the rate cuts, and we could actually see there was a huge, up and downside swing today, with the market still closing at an all-time high, inching of an all-time high, but there was a huge volatility downwards as well on the other side. So yeah, the market's still very much at an all-time high, right above the 50 EMA. Again, if you look at the Dow Jones, futures, or should I just let's just call it the US 30, which is similar really. The so again, this is also at an all-time high. Nothing is budging at all. Again, if we so that's the SPY, just look at Dow Jones, and of course, if you look at the Nasdaq as well, everything is just literally closing at an all-time high. This huge anticipation leading into this interest rate. We had a real quick snap at gold, so which collapsed a little bit off its all-time high. But again, gold is still telling us something, and as we can see there, we had a bit of a dip, but then gold is about to just climb back up again right there. So there's still a bit of fear. Well, not just a little bit. There's still lots of fear in the market. And what is what is Bitcoin telling us? Bitcoin is, as we can see, just closed at the local high, and right now it's about to just climb and run back up again. So this market is still very much bullish, but again, there are fears in the market. One thing we saw with the truth factor, which is TLT, which is the TLT is usually what's the word again, has a negative correlation with the stock market, slightly negative correlation, but we can see it right there. It's literally just almost dipped a little bit. Initially, it was running a bit high, but eventually it closed with a red candle. So how's the market going to behave tomorrow? We don't know. But I saw a few positions running into tomorrow. And before we do look into that, we should look into gold. Sorry, we should look into crude oil. Crude oil, again, not really doing much. It's literally just been on a range. It's been range bound, for, should I say, for the entirety of September, closing with a 61 lows and literally not edging or inching over 64. Yet, President Trump is at the moment in the United Kingdom on a state visit. The president's second time for any United States president or in history, flat out. But now we saw a few things. What did we see? If we saw a few things, positions I saw, there's a clean spark right here. Clean spark has been running into the rate hike, and now it's just about closed above the 50 EMA. So I expect this one to keep running. I think there's another one right here, BNMR. Because of today, it took a little bit of a slow ride, but ultimately I expect this to just keep running eventually at some point. Of course, you've got to beware of your risk strategies. What else did I see? Let's look at Palantir actually. Palantir, while Palantir has been on a slow mood, on a retrace, but it looks like it's about to just pick up again. It's getting a bit tight. It's just closing and it's holding the 50 EMA. So if it stays here and holds, we expect Palantir to keep inching back up. Oracle as well, which I was looking at. Oracle had a brilliant earnings result the last time. They formed a little bit of an island in the sky there. I think once it collapses a little bit, it's going to keep running again. So Oracle is another one I am looking out for. And I think a few other things. We should look at the dollar really. The dollar as the DXY dollar actually, I don't like the price of the dollar right here, but it doesn't matter what I like. President Trump, he wants a cheap dollar, which is good for the United States. Again, so dollar right here, it picks up as a local supports, and this support seems to be holding. Dollar is at a dangerous level right here. If it keeps holding this 50 EMA, then of course I expect dollar to collapse a lot more, and this will be the next local resistance right here, just about 95. And if that happens, then of course again we expect equities to keep moving. So far so good. It doesn't look like there's anything dangerous at all looking. But they just about looking like they might just pick the bond yields. slightly climbed a bit today, but again, with the interest rate being cut, I think these are opportunities for companies to be able to grow a bit more. This opportunity for again, for the real estate or people with credit cards or debt, to be able to lower their interest rate. So this is all good all around. But again, one thing you got to understand is that the Fed do not cut rates except they feel like something is breaking. So is there something we don't know or something that we just need to check behind the hood? We don't know. All we can do is look after the risk, look after the downside, and of course, like I always say, protect the downside all the time. If you don't have any, protect your capital. If you haven't got any more capital, then of course you cannot face this market. So protect capital, and I'll see you soon. Thank you.